So let's consider the macroeconomic elements out there with interest rates higher than before. And then over the last few days, we heard that maybe there's not going to be rates cuts in the US as people were expecting or anticipating. So how do you factor in all these elements in your investment decision, and maybe give us a little bit of background about the history and how many times you've seen that before?
Yeah, it's obviously the key question, as you said, Giovanni, rightfully so, that every investor is asking themselves is, when is the Fed going to cut rate? When is the ECB going to cut rate? And how does that find itself into the overall lending markets? I think the market has had a couple of false starts in anticipating rate reductions. I think the overall central banks have been very careful not to do that too early, to risk of having a backlash of inflation coming back into the market, which in the second stage will be harder to deal with. This has definitely had an influence on the overall lending markets, Giovanni. If you look at the lending statistics, it has actually decreased on the banking side quite significantly. In the US, you can look at some Fed data and you see that last year, about 50% of the banks were more reticent to lend in the third quarter, which definitely was a peak. But obviously there's different dynamics in terms of consolidation in the US banking sector. Smaller banks have had issues, and then you have the rate hike and increases in spread. So all of these factors together have been more of an issue on the lending market, both on the corporate side, but also on the commercial real estate side. Turning to Europe is not so different, actually fairly the same. In Europe, the Basel regulation continues to look at how to strengthen the bank's balance sheets. Actually, there was a little bit of a press release a few months ago that looked at systematic banks and looked at window dressing, trying to limit further window dressing of making the statistics look better than they actually are. But overall, if you look at lending statistics of European banks, also there has been more reticence to lend. Lending restrictions have become higher, but even on the corporate side itself, there have been less applications for loan, and that of course has to do with higher cost of capital. So I think overall that trend where the banking sector becomes less relevant in the overall lending has continued to take place on both sides of the Atlantic, and we see that not changing anytime soon.